Palfinger is a global leader in technology and engineering, specializing in lifting solutions. The company is recognized for its innovation, reliability, and strong industrial performance. Today, CFO Felix Strohbichler presents the figures for the first 9 months of the year, providing insights into the company's performance, profitability, and the strategic initiatives that are driving Palfinger's continued growth. Felix, the floor is yours.
Welcome to the presentation of the results of Palfinger AG for the first 3 quarters of 2025. My name is Felix Strohbichler. I am the CFO of Palfinger AG. Let me start with the equity story of Palfinger, what sets us apart. We are the clear market leader in terms of innovation and also market share. We are a very resilient company based on the broad product portfolio, our global presence, and our industry diversity. We have a huge growth potential, and this is backed by the momentum in Europe and our focus on growth markets like North America, APAC, and Marine, as well as in the service business. And last but not least, we have a huge earnings potential, on the one hand based on the growth, but also because of the fact that we have a huge potential out of digitalization, standardization, and footprint optimization. Palfinger is a true global player with around 2.4 billion of revenue in 2024. We are present worldwide not only with 30 production sites, but also with engineering and technology centers, a comprehensive sales and service network, which is the most important fact for our customers, and around 12,000 employees at the end of Q3. Palfinger has a very broad industry diversity, so we are very well set up and therefore very resilient due to this customer diversity. What have been the key developments in the market in the first 3 quarters? First of all, we have seen a very good order intake development in EMEA starting with Q4 2024, which has continued throughout the year 2025, even if the infrastructure packages like in Germany do not yet show any major impact. In North America, we have been impacted by the recent developments in tariffs, especially Section 232, which have a negative impact on demand, but also lead to a reduction in profitability. In LATAM, we can report record levels due to the positive developments in Brazil. India continues to drive growth in APAC. Marine has shown a very good market environment and also strong profitability already for years now, and this development is going to continue. And last but not least, in Russia, we see a massive slump in the Russian economy, and this also leads to a decline in sales and earnings in Russia for Palfinger. What does this mean for the numbers for the first 3 quarters? Revenue has declined by 3.5% to around 1.7 billion euros. EBIT is at the level of 131 million, which is a reduction of 17.6%. However, driven by the output increase in EMEA, the decline in earnings in the first 3 quarters is expected to be largely compensated in Q4, and we do expect another good year for Palfinger for 2025 in total. If we look at our balance sheet, we can report that we have substantially improved our balance sheet structure. Equity has gone up to 885 million, also driven by the sale of Treasury shares, which generated proceeds of 100 million in summer this year. The equity ratio is now at 41% and net debt has gone down to 577 million. So a very positive balance sheet structure which underlines the financial strength of Palfinger. In the first 3 quarters of 2025, we could already generate a free cash flow of 54 million. Last year, at the same point in time, we were at -2 million, and still we could reach for the full year 2024 around 120 million of free cash flow. So this underlines that we are fully on track to achieve our target and our commitment of more than 100 million of free cash flow for the full year 2025. In 2025, we have also worked on our new strategy called Reach Higher. So this is our strategy 2030 plus. We have focused on 3 strategic directions. First of all, lifting customer value. Secondly, balanced profitable growth. And the third direction is execution excellence. In total, we have defined 18 programs to drive the future growth and profitability of Palfinger. And on this slide, you can see the 5 must-win action fields we have defined in this strategy. On the one hand, it's customer-centric technology and market leader. Secondly, it's the services and spare parts business expansion, which is a very important driver of profitability. We will establish error work platforms as an additional core pillar. We will continue to optimize our supply chain and on process, system, and data optimization. This strategy shall enable us to reach our new ambitious financial targets by 2030, which is more than 3 billion of revenue through organic growth at a 12% EBIT margin, 15% ROCE, and more than 150 million of free cash flow. And of course, our already well-known financial targets by 2027 of 2.7 billion of revenue through organic growth at a 10% EBIT margin, more than 12% ROCE, and more than 100 million of free cash flow remain unchanged. And what will help us to reach those targets is that there are a lot of global investment programs on the horizon supporting our growth opportunities, like the fiscal package in Germany with a budget of 500 billion euros, Rearm Europe with a budget of 800 billion euros, and other programs like they are mentioned on this slide. Thank you for your attention.
Thank you, Felix, for the clear insights into Palfinger's strategy and performance. For investors with further questions, please contact Hannes Reuther, Head of Investor Relations. And to explore more engaging company presentations, visit seat11a.com for additional videos and in-depth investor content.
Disclaimer. As described in the legal section on our website, seat11a.com, this publication is for informational purposes only. This means it is not intended to provide you with any investment advice. Any opinion or recommendation expressed by the companies is neither given nor supported by us and should not be considered investment advice from our side. Also, remember that any opinion or recommendation expressed is subject to change without further notice. The content is obtained from sources believed to be reliable, but we do not guarantee its accuracy, completeness, or timeliness. Seat11a.com and its employees disclaim all liability for any loss that may arise in any form from any use of the information in the video, audio, and on our website. We neither express any opinion on the future value of any security or other investment vehicle, nor recommend any investment based on the information provided. Please consider the publications and our website as a platform for companies to present themselves. You need to seek financial advice from an expert regarding the accuracy and appropriateness of the material presented or recommended by the companies in the publication. As we are just considered a publisher, we may hold and trade securities in the presenting company, whether it is a listed or private company. By consuming our content, you agree to these terms and the terms in our legal section on our website.